Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, we're going to be taking a look at Bitcoin, the rainbow chart, seeing where we're at as far as price action is concerned, going over to the Fear and Greed Index on alternative.me. Right now, we are at greed. 76 and above is extreme greed. And recently, we've just had this minor downtrend from extreme greed into greed. Could this go a little bit lower? Sure. I mean, I look at this the same way I do charts on TradingView. If we're still making higher lows and we're accumulating up really high, I think that tends to be good for price action. Zooming out, this only goes back as far as early 2018. The bull run back then peaked in late 2017, and altcoins peaked in the first week of 2018. But you can see where we were recently. We've only been there twice before. This area around December 2020, which was when Bitcoin was making new all-time highs from its 2017 top. This was not the all-time high. The first all-time high it made was around April of 21. And that cycle, the true all-time high, was in November of 21. Going over to the rainbow chart, here in December 2020, this is when we were breaking above this all-time high. That's when we were peaked in extreme greed. But again, this was here in April 21. The true top last cycle was November 21. This right here, this mid-cycle top in the middle of 2019, that's where you see the spike up here. So I want to see greed stay up here in this range. I want to see us stay up nice and high. Now you can see that even the last cycle, there is a couple times where it went down to 40, if not lower, before in April when it made that high of around 65,000. And even before going to November, it crashed down here and Bitcoin took like a 50% dump. So we're going to get over to that in a second. Going over to the Bitcoin rainbow chart, something I've noted before is that each halving on blockchaincenter.net, the way they have the rainbow chart drawn up, this is a logarithmic chart. If you don't know what log scale means, it means we go by factors of 10, so 1, 10, 100, 1,000, so on. If you were tracking statistics for COVID infections and deaths, the chart looked very similar to this back in 2020, 21. Anyways, so something I've noted is that each halving, we've gone up one of these zones on the rainbow color bands. So second halving, we were in the buy zone. Third halving, the accumulate zone. Fourth halving, I've been wondering if we're going to be in the still cheap zone. Now, the fourth halving is around April 19th, April 22nd, somewhere in there. And you can see that green box. It'll be somewhere between 52.5 and 69. Should we keep this pattern? Now, as I showed you with the disclaimer at the beginning, analysis of past data is not always indicative of future results. Now, something that crypto YouTubers and people on TikTok fall into the trap of is they look for so many patterns that they say, well, this has to play out, this has to play out. And no one's ever fully correct. If someone figured out the secret Krabby Patty recipe of how the charts would be so easily predicted, everyone would be copying them and they'd be a billionaire. So it is cool when we notice patterns. Should you base your whole financial well-being off of it or your investments strategy? I wouldn't personally, but it is something to notice. When we go to the alt season index, you can see here that we are starting this uptrend. Now, it still may come down a little bit, but overall, it does look like we're getting ready and gearing up to fly higher. Now, this alt season index, I'll tell you, a lot of the alts that I noticed last cycle, most of them, as far as what I saw on Coinbase, ran in this area here. This was back in September 2020. This was late 21. There were altcoins that made their true all-time high there. So just something to be aware of. As far as these cycles, you'll see that each cycle we've had two peaks, except for 2017. You could say we had a lower peak later on, but the first cycle before the first halving, we had those two peaks that went higher. Second cycle, same thing. Last cycle, same thing, relatively even. So this 2017 one's unique in how we peaked, but then the next peak was a bit lower. So every cycle seems to do something different. What will it be this time? Well, so far, the one different thing that stands out is that we have made new all-time highs before the halving. That has not happened. When we've made a cycle top, we have not made new all-time highs this close before the halving. So that is different, just something to be aware of. Going over to the charts, and this is Bitcoin within the last year. And whether it's stocks or crypto, if something's at or near yearly highs, I'm not buying it. The time to buy is down here. I have these moving averages drawn up as well as you'll see these green and red dots. This is a buy sell signal indicator that I have on. This one right here, 1020 moving average crossover with Heikin-Ashi signals, more of a front running buy sell signal indicator. UT bot alerts is more of a confirming indicator if you want to be even more patient. But what I like to do, first off, is zoom out, and I like to go to the monthly. And overall, when you buy the monthly buy signals, tends to be a good time. Now, does it work 100% of the time? No. You can see here we have this monthly buy signal. Sorry, the fib numbers are in the way. However, I will say I wouldn't be buying just because Bitcoin ran from 8,000 to 60,000. So even though it pulled back a little bit, we've seen how crypto and Bitcoin can be so volatile in the short term that there's usually a big dump. So I wouldn't have been buying it back then. Anyways, going over to the weekly, you can see here since we had these three pullbacks, which were all around 20% since the stock market's been in a similar position too since November, that we've just ran up, and a lot of the top stocks have been doing the same. So about 150%. I saw on I believe it was CNBC or something, they were talking about the top performing assets this last year or sectors, and Bitcoin was one of them that was up there. So that was kind of cool to see. Anyways, we're above these moving averages. I have my candles on the Heikin-Ashi candle instead of the regular, so the timing of them is different. And something I've noticed is that, at least with the Heikin-Ashi candles, it really hasn't had a close above this gray line is prior all-time highs. So to me, that's curious. When we are running up and we get a little bit of pullback, you want to see a break above. That way you know further movement to the upside is coming. We've been in this, you can see from the wicks, this minor downtrend here. Now, even though we didn't get a red weekly sell candle, we still, from the peak and the lower end of those wicks, moved close to that 20% area. So all because the timing was different, it's not really as reflected on the weekly, but we did get a little bit of a pullback here. And you can see that Bitcoin, at least in the short term, is creating this little wedge flag pattern here. So somewhere within this time frame, by mid-April, you can see the dates at the bottom, mid-April, I'm curious to see where this will go, whether it's breaking down or up. We'll see. I've seen videos that talk about how the eclipse is bullish somehow. Sure, maybe, why not? But I don't base any of my charts off other factors like that. I just try to take a look at it for what it's giving me, not be bearish, not be bullish. One of my goals when I invest is to try to remove my bias as much as I can and just take a look at it in an unbiased way, look at the positives, look at the negatives. Bitcoin, it has a market cap of 1.34 trillion. So something else to keep in mind, the top stocks in the world like Microsoft, Apple, they're around 3 trillion, and Nvidia, number 3 stocks at 2 trillion. So how high can Bitcoin go? Well, if it did a 2x from here, it would have around a 2.7 trillion market cap, which would put it really close to where Apple is right now. and it would double in price to around 140. So if we go down to Apple, yeah, you can see 2.6 trillion. So that's what we would be looking at. All things being equal, that Bitcoin would be, if it did go up to 140, 150K, it would be the number 2 asset in the world. So something to keep in mind. Going back to the rainbow chart, what's nice about blockchaincenter.net is they show you the prices in these zones. And so something I've thought about is that maybe the price is, we're going to have pullbacks. Even in 2017, this great run, you can see we had pullbacks there. And if I just go to the daily chart, which will show more accurately some of these pullbacks, I mean, this is just from the last cycle that we had. We had pullbacks of 30% going up to the top. This one, not as much, 10%. Okay. This was the COVID dump, obviously. The post-halving, we had a 20% dump. And so 20, 30% corrections can happen. It's not unusual. 2017, a lot of these were around 30-ish percent. So yeah, 30%. This one looks even bigger, 40%. I remember being in the 2017 bull run. It kind of became a little bit of a repeated running joke, like, oh, another 30, 40% correction, and it's going to go back up. And it kept doing that until it didn't. And people were talking about it being in a bubble even way back here. And then obviously in early 2018 is when altcoins and Bitcoin really started to sell off. I mean, can you imagine being in Bitcoin, being excited, buying in somewhere up here, 13, 14,000, seeing it go to 20 and then dumping to 6? Yeah, that would have been brutal. So anyways, going back to the rainbow chart, like I said, we're going to have corrections, but I've thought about, maybe Bitcoin's going to keep running until about the time they do rate cuts. And they've talked about rate cuts happening late summer, and with recent jobs report, there has been a lot of stock volatility this week because the economy is seeming to be stronger than they want it to be. So the Fed wants to raise rates for higher to cool inflation, because if they start cutting rates too soon, inflation can get out of control like it did in the 70s. They don't want that. They want inflation to be stable. Okay, so they're going to wait on cutting rates, hopefully, and not do it for any political reasons, all because there's an election this year. So something to note here, I'm just going over to the S&P 500, and when I zoom out here, you can see that, we're on the daily still. When I zoom out here, the red lines are when the Fed first cut rates. And if you're familiar with the yield curve inversion, it gets inverted when rates are up and it uninverts when they start cutting. This red line was the first rate cut after holding rates higher for longer. This was the dot-com bubble. This was the great financial crisis. Something you'll notice is that where they cut rates wasn't too far off from where the top was. And the bottom was within a year and a half, 2 years of that rate cut. The yield curve also uninverted within a month of that. So if you've been paying attention to the yield curve inversion, when it uninverts, it'll be very close to when the rate cuts should happen. Now, something to notice, I drew this channel going up since, the bottom of the great financial crisis, so trying to get the lows, the highs. This was the COVID dump. Closed down here, yeah, wicked underneath a little bit. I have the moving averages too. But when there was I remember in this time, 2019, 2020, there was a lot of talks about a recession being within a year or two around the corner. When they cut rates, markets still ran up a little bit. And then all of a sudden, black swan event, COVID came, and we had that kind of flash recession, flash crash before all the money printing. Big reason why we have inflation problems till today. Can't just print 6 trillion out of thin air with record low rates and not expect inflation to skyrocket. That's what happened. Markets went from 2,500 up to near 5,000. Obviously now we're higher. So the Fed's talking about cutting rates, and it's possible it's going to be later in the summer. who knows? So one of my theories is that when they do cut rates, kind of like I showed you in the S&P around the great financial crisis peak and the dot-com bubble peak, is that that will maybe be near where the top is. We'll see. Let's say rates don't get cut until, most recent jobs report made things seem like they're going to wait even longer. So let's say they don't cut rates until July or August, right? Let's just go till mid-July here. And you can see the peaks of where Bitcoin is in this chart and how it's been up here in this dark red area. Last time it only got down to the lighter red area and then into the orange. So let's just say the orange band, just to give a fair prediction. Nothing mega bullish. Yeah, I'm not here to say Bitcoin's going to 500K or anything like that. And nothing super bearish either, but just somewhere in the middle. So you can see that orange box. The range is 125K to 160K. And to me, that makes sense. Remember, I talked about if Bitcoin doubled, it would have a market cap very close to what Apple is right now. And Microsoft is even a little bit higher at like 3.1, 3.2 trillion. And so maybe Bitcoin is going to become the number 2 asset there is. Okay. That orange box would then make sense. It would be somewhere in that range. Going back over to the charts, something else to notice, there's a couple things I want you guys to take a look at here. This is the Bitcoin dominance chart, and right now what this means is that 54.4% of all money in crypto is in Bitcoin. Okay, this was 2018 the 2017 bull run to 2018. Let me take off these moving averages here. I can add them back on later. Something I want you to notice is that when the Bitcoin dominance dumps, you'll see here the date at the bottom, mid-December till January 8th. I remember January 8th very vividly because that's when things started to dump bad. But we had about 2-3 weeks, maybe you could say 4 weeks, okay, from when it first started. 4 weeks, a month where Bitcoin dominance dumped. Guys, that was the time to be in altcoins. If you were holding any of the right altcoins, they were doing 5, 10, 20, 50x out of nowhere. Now, something to remember with that, I don't want to say that any altcoin can 50x because a lot of YouTubers and people ignore market cap. You can't ignore market cap. When people talk about $10,000 XRP, Ripple, it's completely stupid because Ripple, for example, I'm going to use this because it's one of the best examples I can give. Ripple is a number 7 crypto at 60 cents, and it has a $32.5 billion market cap. This is how you calculate market cap. If Ripple was worth $10,000 at the peak of the cycle, when Bitcoin dominance tanks and money flows into altcoins, first of all, there's not enough money from Bitcoin. We're talking about 2.5 to 3 trillion. There's not enough money from there to flow into Ripple to make it worth that high. Because if you took 10,000 divided by 0.59 or 0.6 to make it easier, that number, when you multiply it times the market cap, would make Ripple worth $500 trillion, and the global GDP is 100 trillion. Okay, so you're telling me that Ripple would be worth 5 times more than the entire planet's GDP each year? It's just, there's a lot of stupid predictions out there because people don't factor in market cap. So when I'm looking at altcoins outside of Ethereum, Solana, maybe Doge, sure, XRP, or something else that's really strong like Link. At best, I'm looking at 100 to 200 billion-dollar market caps at its peak. I'm not saying it's going to stay there, but you could say, well, okay, maybe this will do a 20x. Okay, I think that'd be safe to say. I've seen some crazy predictions for Solana. Right now, it's at 80 billion. So maybe you believe it could go up to $400 billion. Guys, I don't think 400 billion or anything above 200 is something that more than, I don't know, a few altcoins are going to achieve. So unless it's Ethereum, you can see here it's at 400 billion. Maybe Ethereum gets close to a trillion, does like a 2 or 3x. I really don't buy into altcoins getting above that, even $300 billion mark. So that's how I look at market cap. Now, sure, if you want to ignore market cap completely and say, Ethereum's going to be worth 100,000, by all means, do what you want to do. But for the peak of this cycle, I don't see it yet. The next cycle, maybe. The next cycle, I could see prices getting more ridiculous. And I'll tell you why and what that has to do with inflation. But first of all, let's go back a second. Sorry, squirrel brain, soapbox moment there. Bitcoin dominance crashes, altcoins go nuts. Same thing here. March of 21. Okay, this is the middle of March till it was really earlier than that. It was about mid-May. So we had about 6-ish, 7 weeks where Bitcoin dominance was crashing, and then it went down. Something to note here is, at least on the Heikin-Ashi candles, this candle closes higher than it's been ever. So we were going up in more of a 45-degree angle here until we started to go sideways. So this is, kind of like a rainbow chart, making a rainbow pattern until it crashes. Now, you can see here we have this little flag pattern. And is it possible dominance peaks up? Sure. Okay, I have this trend line drawn because, just from around where that peak was over here, you can see Bitcoin dominance peaked here. I'm just curious to see if it touches it. Now, trend lines are only good for as long as they're good for it. It might not touch it. Who knows? But you'll see here where Bitcoin dominance comes down is somewhere around this low 40% range. And by the time it's about to touch there, it tends to be near the peak of the alt season. Are we going to get up to somewhere around, 57, 56, 58%? Maybe. You'll see here, I have this very lazy trend line here, but I drew it because this is where we dipped in August of 2020, before Bitcoin started running, making new all-time highs, December 2020. And from December 2020 till April, altcoins were just going nuts. So you had about 3-4 months in this time right there if you were in by this time. So good news is it's not entirely too late. We'll take a look at an altcoin or two. But it is interesting, this trend line that I just have drawn back here, just kind of an area of resistance and then support before breaking through. Might be the area, it's close to this line as well. You can see down here, what does this say? Like, if that trend line comes over, and let's just do that. Why not? We're here. If that trend line comes over and meets this line, I know it's not a perfectly straight line. You can see right there, it's a little bit off. You can see right here, it could happen in June. And I've talked before about how, we have 3 to 6 weeks that dominance can tank. And so what if, right before rates are about to be cut, that last month and a half, Bitcoin dominance goes up to here and then tanks. And that's the peak of this bull run. And then we're in one of those 1 to 2 year bear market recessions like the dot-com bubble, the great financial crisis. Okay, sure, maybe. Another thing to look at, let me take this off log and add in the RSI. This right here, to me so far, is one of my more bullish looking charts. Again, things can always be different, but something I noted is that last time, well, okay, what this is the tether dominance. First of all, let me take a step back and explain. And this trend line that's going up, we've hit it when we've been at tops, whether it's been the cycle top in 2017, the 2019 mid-cycle top, right before COVID. The COVID dump in March, so we had a peak there in Bitcoin. This was the first Bitcoin top, the second Bitcoin top. Going back to the rainbow chart, this double top, again, let me go back here. That was this right here. So you see how we either bounced off it or rode up that line. Now, something I want you to take a look at is relative strength index. You can see how last time we were never this low. And once we broke above 50, look at that, May 10th. That was about the time that Bitcoin started to do that 50% drawdown to like the 30,000s before going back up to 69K. What do you see right here is that our RSI has gone way down, deeper than ever before. Kind of reminds me of the late 2020, early 21. Now you can see here that it can peak up super fast. So it's possible that happens, and this isn't bullish at all, but I do think it's promising that the RSI is so deep, and that by the time it takes to come up, just, even a little bit, let's just say again, June, July, something like that, right before the first rate cuts happen, that a lot of damage can be done. So I'm looking at that as well. One of the other factors I want to talk with you guys about before I get too far. Remember how I talked about altcoins only being worth so much? Something I want to show you guys. When we go back to the 70s, by the way, the white line is the inflation peak. And in the 70s, we had 3 peaks of inflation. Okay, I can show you that in another chart here in a second. Red lines, obviously, like I've explained before, where they first cut rates. This last peak of inflation was the worst, okay? A lot of people are thinking that we had something similar to this second peak, and I'll pull up an inflation rate chart here after just to show you. But something I'll have you guys notice here is when they cut rates here, this last time an inflation peaked, the market started to run like crazy. Now, something people don't talk about, and obviously here we had the 87 flash crash, something that I don't hear enough people talk about is, yes, inflation has been going nuts, and it's possible if they cut rates too soon that inflation will go up even higher than it did a couple of years ago. Something that happened in the early 80s and into the 80s is eventually wages had to catch up. You're already seeing a lot of protests, people wanting their cost of living wages to catch up. Inflation's been so bad, things have become less affordable. So there's going to be increased amount of protests because people want to make a living wage, or, not lose value on the money they're saving because of inflation. Inflation is very much a tax on people for saving their money. But as wages catch up, that artificially increases the value of all the stocks that are in the S&P 500. And even though things are going 2-3 times higher overall by number, you have to remember that the dollar is also weakening that much, and people are starting to get paid more. Their wages are growing. So, maybe you have a $50,000-$60,000 salary right now. In 4 or 5 years, that could be $100,000. And it's not that you have more purchasing power. It's just that inflation has caused so much damage that in order to maintain some amount of the same level of purchasing power, you get paid more. Cost of living increases are going to be a lot higher now than they traditionally are. That 3% average. If we go to, let's see if I can just type in inflation. Here we go. Inflation rates. Let's take this off log. And here we are. This is the 70s. So this peak here, remember what I just showed you. The market really didn't correct that much. In fact, it started going nuts after the fact. Here it had big corrections. Okay. You can see here the peaks. Well, I drew the white lines on the peaks there. So all I have to do is go back to the 70s. Whoop. So going back to the 70s here, those white lines were the peak of inflation. Those were pretty close to where the market bottoms were. Okay, but after they cut rates that last time, we just kept going up. And so, I've drawn that recently. Where was the peak of inflation? Down near the bottom. Now, who knows what's going to happen this time? If it's going to be anything like the 70s, the late 70s, where they cut rates. And guys, this does apply to Bitcoin, and I hope you're seeing the correlation. that, if they cut rates too soon and inflation peaks again, that can cause markets to crash and go down. They cut rates, that is also marked tops of bubbles. So it's a very delicate time for the Fed to try to figure this out the best way possible. I think it's different than what they had in the 70s for many reasons. And so, yeah, they have a tough job ahead of them. We'll see where things go with that. But going back to Bitcoin, if they cut rates, you've seen that can tend to be local tops. Okay. The one bullish scenario, if you were taking a look at that third peak of inflation and how markets didn't correct as bad as people thought, okay, you could take a look at it that way, that maybe the next correction really isn't going to be so bad, that, wages are going to catch up. I don't see that happening yet. I do think, this is my personal opinion, that there's going to be more pain first. Probably another big drawdown, especially with how quickly the overall price or value of the S&P has gone up in such a short period of time. Let's put this on weekly here. So since this 2023, October 23 bottom, the S&P has gone up, just from the bottom top there, 28%. Guys, that's one of the top 5 strongest moves all time in that short period of time for the S&P. That's how crazy this is. Okay, Bitcoin, same time, since around there, we've gone up around 150, 170%. Okay, are we done? I don't believe so. I do think we're going to have increasing amounts of volatility, and you can take a look at the Volatility Index. This is volatility in the markets. What you'll see is, even though the volatility is low, what's it doing? It's getting bigger. These waves are getting bigger. And I wonder if this little pattern is going to start growing into a much bigger pattern. You can see that sometimes it just spikes out of nowhere. Other times, it can grow. So I'm interested to see what the VIX is going to do. Yeah, you can see kind of right here before the great financial crisis, had these spikes up to around 30. I mean, people probably thought they were out of the woods, downward trend, and then boom, the bottom of the market falls out. So I think, yeah, here, look at this dot-com bubble. Look at how this wave just kept growing, okay? And it really never got above 40, but any of those times around 40 for the VIX tend to be local bottoms in the market around there. So where do I think Bitcoin's going? I do think there's going to be corrections, especially with institutional money being in the crypto industry now, with the ETFs and everything. They're going to just look at taking profits when it's logical to do so. Whereas a lot of crypto degenerate gamblers, educated gamblers, try to make you feel a little bit better about yourself, want to get a 20x, a 10x. Instant hedge funds, places like BlackRock, all them, they don't care about a 20x. They're happy with making 30%, 40%. So if they start the ETF, let's zoom in a little bit. I'll show you where the ETF started. The ETF was approved right in here. Okay, had a little bit of a sell-off. So they start the ETF in here. They get money down here. They're happy to take profits. When you are working with billions of dollars, tens or hundreds of billions of dollars, they're happy to take profits when it's up here. Okay, so smart money is not looking to stretch themselves financially too much. So do know it is totally normal for there to be profit taking and for that to cause dumps. Like in 2017, we can get these drawdowns. Okay, overall, you say RSI, we're looking bullish on Bitcoin on the weekly. Buy sell signals, we haven't had a sell signal in a while, so it's more possible that we're going to get one sooner than later. We have some on the daily. This little flag pattern. Like I said, mid-April, I think we're going to have some answers. If it breaks down, this area of around 50,000, I think, would be an area to watch because, let me zoom out here. That is the 786. Okay. That is the 786. On the weekly, you don't see it as much as you do on the daily. But on the daily, the 786 right here, and it's around, actually, no, that's not the 786. No, it is. Okay, never mind. That's around 51,000. We have structure here, so if we broke down, that would be an area I'd watch for a possible turnaround. Beneath that, 42, 43K, there's a lot of structure in here. And we have the 0.5 fib down here. Maybe, maximum bear scenario, something like that can happen. Something I'll add on to this, the moving averages, let me thicken those up. That's what she said. And sorry about that. It should be a family-friendly show. Okay, we have the 50, 100, and 200 highlighted. This is on the daily, okay? We click the last year, 1 year and 1 day interval. So we're looking at the daily, okay? You'll see here on the daily that the moving average, we would have to get closer to the 200 to get down to this 52 level. Now it is moving its way up, but if we did get a big move down, that's just something I'm watching for. If we zoom out to the weekly, you'll see the 100 is, well, the 50 is more closer to that. The 50 moving average, sorry. The 100 is close to the 0.5 is what I was going to say. And no, that's my own separate like buy zones and stuff. Should probably just delete that. So the 50 week moving average is right around that 42 price level. Again, I think that's like max bearish possibility. The 20s are right around that 51K. That's if we get a drawdown. Now, how I look for possible price targets if we move up. Let's take this fib. Anytime we're moving above prior all-time highs, when we're between the all-time highs, you put your fib on log scale. When we're moving above, you see when I take it off log scale, it shows us more levels. The 1618 is at 102,000. And look at that. The 2618 is at around 156,000. All right, 155.7, just rounding. This to me would be the most bullish scenario, around 210,000 or 209,000 here at the 3618. I'm going to watch those levels. And I know this seems random. I guess I can show you, case in point, if we take a look at something like NVIDIA, when we look at a fib in the same way, it encountered resistance at the 1618. Trust me, it encountered resistance there. I'll zoom in a second. But look how it got to the 3618, tagged it, and came off. And if I zoom in, there we go. You can see how close it came there. So institutions are definitely setting their sell targets and taking profits there. And you can see here, like I showed you before, I said there was resistance. Yes, it was a little bit, came down to the 20, and then boom, shot up and through. So, something like NVIDIA, you could say maybe go down to the 50 and then boom, shoot up and through. Maybe, we'll see. But that's why we take a look at those fibs. They give us possible, very bullish scenario price targets. Now, as far as altcoins, because we've had volatility, me personally, I don't buy altcoins unless, I'm seeing more macro buy signals. Link I was able to get in down here when I was seeing macro buy signals on the monthly. And then, so if we zoom out, we get 4 macro monthly buy signals. If we go to the weekly, we get a few more. It's not, TA isn't everything. It shouldn't be the only thing you look at, but it is one thing that can help us increase the value of our investments with our hard-earned money. Okay, we had some accumulation within like a 3-6 month range in here. And, Link, it's coming down here to the 20 moving average and possibly, here to the 0.5. I'm just showing this as an example. There are some sell signals, some downward pressure. Some altcoins, if we are to have a cycle blow off top like we did here, if we are in a similar time as December 2020, which it kind of feels like, then these pullbacks may be the last buy the dip opportunities. Now, I showed you it's possible pullbacks can get more violent. Maybe if Bitcoin were to get down to 51, 42K, somewhere like that, obviously altcoins are going to dump even harder. And if they did, I'd be watching for a 50% retracement from their tops. So just taking Link, for example, look at that. Where's the 50% retracement? It's right at the 200-week moving average. I think a lot of altcoins, should we get a very bearish scenario pullback, I would be watching these 200-week moving averages like a hawk, maybe even the 100. But don't just buy the red candles because, here, yes, we got a turnaround. We had good structure. This was overall bullish, on the RSI and the chart, but when we do run up an insane amount and things start going down, you buy these green candles and it's possible we just dump further. Do I think this cycle is done? I don't think it is yet, because rate cuts don't seem to be coming anytime soon. But again, you shouldn't base your investment strategy off something I'm saying or any YouTuber saying. Do your own research. My rule of stocks is it's got to be something I like, something I use. With crypto, that's a lot harder. I've only, we're betting on the future of this technology. It's very speculative. I've only seen exchange machines in third world countries in the ghetto. Not trying to hate, that's just what I've seen. This has been around for more than a decade, and I would like if the tangible utility was a bit higher. Decentralized Web3, DApp, all that stuff. It's, as far as I'm concerned, it's nonsense until we're really using this stuff. And a lot of these news articles about partnerships, just seem to be blowing smoke. So, hopefully, we can find some utility with it. But maybe you're making educated gambles, just trying to buy low, sell high. Hey, I respect that. There's been the last two cycles a lot of gains to be made, just trading or being a trade investor alone. Okay, buying good value, selling when things are high. So that's something you can do. Last thing I'll show you guys before I leave you all here is I'll remove this buy signal. If we take a look at Pi cycle Bitcoin high low, this is something for you to watch. I know there's a lot of lines. This overall has been very close to where the highs and lows have been. Highs, lows. Now, this first cycle, 2013, yes, you would have had a fake out. Is it possible that could happen again? Sure, why not? This buy cycle low wasn't the very bottom, but hey, I don't think anyone would be complaining about getting Bitcoin at 20,000, compared to 17,000 with where it is right now. Okay, even if you were to sell now, that's possible. So I am looking for Bitcoin. You see this white line, you had to stay above it and have a pretty strong move to hit that Pi cycle high indicator. We've hit that white line. We're going sideways. I am looking for it to ride even higher. Again, going to NVIDIA, when I've taken a look at, some stocks to see their Pi cycle highs and lows, usually stocks, they'll hit the line and then just kind of go sideways off it. And so I think, as Bitcoin becomes less volatile each cycle over time, it'll probably stop hitting the Pi cycle high indicator sometime. This cycle, yeah, I think it's a possibility we don't get that signal. Something to keep in mind. So hope y'all are doing well. Hope you enjoyed this content. If there are any altcoins you would like for me to take a technical look at, let me know. I do videos semi-regularly on coins, altcoins available on Coinbase and Robinhood. I do weekly videos on Bitcoin mining stocks, and I also talk about the Magnificent Seven stocks and earning reports as well, because with crypto money being so volatile, we can take our profits and roll it into something safer that can work for us for a lot longer as well. So that's what I like to do with my money. Obviously, not financial advice. Do what you want with your money. But that's one way I look at it. Anyways, hope you guys enjoyed the content. Hope you all have a fantastic weekend. Take care. Bye-bye.